Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio. For the last several months, our indicators were telling us to be cautious, which is why we had a substantial amount of cash, in fact, close to 90% in cash in money markets. And again, things happen slowly, but then, as they say, the bad things happen all at once, and we say, why didn't we do it? The purpose of this video is to show you the same indicators that, again, for a long time they've been telling us to be careful. I want to discuss the current position and what they're saying about the outlook for the market in the near term and the long term. This chart shows two graphs. One is one way to show our business cycle indicator, this one, and this was the change in the S&P 500 over 12 months. As I said in the introduction, things happen slowly and then all at once. We never believe what this business cycle indicators is saying, and we just say, well, let's wait. But then things happen. Again, this, as you know, when the business cycle indicator rise, business is strong, and the stock market, the cyclical sectors especially, they are very particularly outperforming the market. When instead the business cycle declines, it means that the economy is changing and the more defensive sectors outperform and the overall stock market slows down. This is the pattern since early 2024, mid 2024. The business cycle indicator started slowing down, and it said, look, to our subscribers, you still better implement a defensive strategy. Of course, this is very difficult to do. Why? Because when this indicator starts slowing down and tell us to be cautious, chances are the stock market is in the last phase of strong growth, and people don't want to become conservative when the stock market is strong. But then this is what happens, and this is the bottom chart. This is the growth of the stock market over 12 months. And then, as you can see, exactly mimics the growth of our business cycle indicator. And here they started the business cycle indicators were declining, and this is where the prices of the S&P 500 started slowing down quite sharply, and now are at the same levels basically as of mid 2024. So what is this chart saying? What's the point? The point is that you want to be in aggressives. In other words, when the business cycle turns up, this is when you want to be aggressive and buy cyclical stocks. When the business cycle is still coming down, is still heading though, you have to maintain a defensive investment strategy. But of course, there are opportunities. But this is what the purpose of the next charts is. This chart shows two main graphs. One is the S&P 500 since 2011. And this is a trend line, as you can see, straight until now. And it says that since 2011, the trend of the market, at least since 2011, the trend of the market has been going up. Of course, when you see a big deviation from the market from these trend lines, like here, like here, like here, and like here, you expect the stock market to weaken until at least touches the red dotted line, which is what we are anticipating. So, but the trend still, we are in a major trend. The charts at the bottom chart graphs are the business cycle indicators. And again, is a different version from the one I showed you in the previous slide. But when the business cycle indicator rises, this is the time you want to be aggressive. But when it starts slowing down, is the time to be defensive. Now, this has been telling us to be defensive since early 2024. Defensive doesn't mean sell everything, but switch from a cyclical to defensive sectors. And the more it goes down, the more you raise cash. So where do we stand now? What is the business cycle saying? you notice that when it goes up and then start going down, notice how the market doesn't do anything when it goes down. Here it started declining and the markets didn't perform very well. Here it started declining and the market from this point on didn't do well. So now it started declining here and the market is not doing well at all. That's the bad news. The good news is, though, that when the business cycle indicators reach this level, like it is here, 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 and here, you see a major bottom in the stock market, like this one and like this one, as you can see. This is a good, excellent time to buy when the business cycle indicator reaches this level. Now, so what is the point of this graph then? Is the business cycle indicators are saying the market is very oversold from a fundamental viewpoint. So much of the correction has happened. Is this a time to go out and buy everything? No. What it's saying is just start looking for a bottom because the bottom is close. The right time to buy is after it bottoms and starts going up. After it bottoms and start going up. After it bottoms and start going up. So the ideal time is when this bottoms and then start rising. But we are very close to a major bottom in the stock market that can happen between now and the end of the year. But what about the near term, the next week, 2 weeks, next 2 months? Well, we have to rely on a different type of indicators. The business cycle indicator is a strategic gauge. To time a little closer, so the next 2 or 3 months, we look at it to a different set of measures. And again, in this graph, in this chart, you see two graphs. One is the S&P 500. This is the 200-day moving average. And the graph below is a measure of market volatility. Now, we have a technical long-term market indicator, which is based on a 200-day moving average. And our subscribers know that it gave a sell signal because it's triggered only at the end of the month. We've determined that the best way is to wait for the end of the month. If the market is below the 200-day moving average at the end of the month, then is either a buy or sell signal, depending if the market is above or below the 200-day moving average. So this is a bearish sign, definitely, that was triggered at the end of March. Now, from a near term, the level of volatility, as you can see, has reached pretty high level. In other words, there is a lot of fear in the market. And when there is a lot of fear, like it happened in 2022, in the fall of 2022, you should expect a major bottom. So how would you interpret this chart? Well, there is a lot of fear and it's time to think positive for in the near term. This is what this indicator is saying. Let's see if there is more information to determine if this is a reliable signal. This chart shows two graphs. The first graph is the S&P 500 since 2011. As you can see, the bull market trend is still intact. The chart below, the graph below, shows the bearish sentiment of retail investors, and it is inverted, so that it correlates better with the tops and bottoms of the market. And when the graph is below this line here, like in here, like in here, like in here, like at this point, or at this point, it shows that there is so much pessimism that the market bottoms at that time. This is when you have a major bottom. This is when you have a major bottom. This is when you have an excellent buy opportunity. And this is where you have excellent buy opportunity. So what the fear and greed index that I shows often on X. And what is this indicator? The bearish sentiment of retail investors is saying this is a good buying opportunity. And if you take the message of this sentiment gives together with what volatility is saying, I think this is a good time to start buying stocks for the near term, not long term, near term. So this is a trading opportunity. But there is something more I want to show you. There is a reason why I want to show you the international markets, and this is the all world ex-US market. And below is just a moving average, two moving averages. A long time ago, I showed you how the business cycle of the United States and one of the major foreign economies are exactly the same. And I also showed you that tops and bottoms of major foreign markets happen exactly at the same time as the United States. And I want to show you this international chart because it has another peculiarity which is consistent with what's happening in the United States. I put the arrows here, this arrow, this arrow, this arrow, this arrow, and this arrow here. These arrows are exactly distance from each other, roughly 3.5 years. It's incredible, but that's the cyclicality of the markets. And I showed this chart to my subscribers a long time ago, and I put this graph, and I say what the cycle says that we are going to have a major top. And that's exactly what we are having. And when this top happens, it goes down for a year and a half, the market. So this is an important top, not only for the US market, but also for the foreign equity market. What is the lesson? The lesson is that when you buy foreign markets, foreign equity, you don't buy a hedging strategy. You are not implementing a hedging strategy. You just buy volatility. It's just that market is outperforming the US market, but if there is a bond, a top, it's going to go down like the US market. So you just buy the volatility, the outperformance. So you have to be very astute to understand why the market is going to go up, for how long, when to buy, and when to sell. Because when the top comes, it comes for all the markets. And what this chart is saying, something big is coming like in previous peaks. So near term, the bottom line of what I've been saying is in the near term, there is a buy opportunity, it is a trading opportunity, and in fact, our subscribers know we started buying again. But over the long term, let's wait and see and get more evidence that the market is really reaching a major bottom. It's getting there, but it takes patience. We have 3 levels of membership. Membership 1 with videos about business cycle developments. Membership number 2, videos and financial updates weekly. Now, one thing you should notice that here, this membership number 1 does not get the market updates that membership number 2 gets. So if there is a market conditions that warrant some analysis, membership number 2 will get it, but not membership number 1, because membership number 1 will only are able to access our videos. Then membership number 3 has everything that we publish. The Peter Dack portfolio, 22 pages twice per month, videos. We have model portfolios and transactions, market transactions, and market updates. I really do appreciate the fact you follow this video. I hope you found it useful, informative, and actionable above all. That gave you some ideas on what to do with your portfolio. If you want to go more into details of what our research is, please do access www.patreon.com/Peter Dack. Again, thank you very much for reviewing this video, and I hope to see you really soon. So long, and have a wonderful day.